following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, that rocking tune means it is time yet again for the Option Block, everyone's favorite bi-weekly source for all things related to the realm of options. My name is Mark Longo from the OptionsInsider.com, as well as from the Options Insider Radio Network, upon which this very program is featured. And let me let you guys know right here at the top of the show, this is episode 299. Hard to believe, yes. So that means that this episode coming out this Friday on the 20th is going to be our 300th episode spectacular. So what we thought, what better way to celebrate with that show than to take a nice look back, a little trip down memory lane, and kind of reminisce about some of our favorite experiences and episodes and happenings from these past 299 episodes. But that also includes you guys, the listeners. You guys have obviously been a big part of the show. So if you guys want to send in your favorite questions, comments, things we did on the show, things maybe you didn't like, whatever the case may be, some of your favorite highlights from the past 300 or close to 300 episodes now, then by all means do so. A lot of great ways to do that. Of course, theoptionsinsider.com. Post a comment on our site. We'll find it there. You can find us on Twitter, twitter.com/options. On Facebook, more and more you taking the Facebook route these days, facebook.com/theoptionsinsider, or the old-fashioned way, questions at theoptionsinsider.com. Maybe you put Option Block 300th episode spectacular in the subject line so we know what you're referring to. Of course, if you want to send in your comments and questions too, feel free to send those in, and if we have some time on the show, we'll feature them as well. We're going to try to get to as many of those as we possibly can on the big 300th episode spectacular. So start sending those questions and comments and favorite memories in now so we have time to get them on the show later this week. And speaking of the show, we got a great panel in store for you today. I'm joined, as always, by the usual cast of characters, starting off with the man formerly of many hats, now the man of many headsets. A little bit of an insider joke here on the panel. Of course, none other than the Viceroy himself, good old Alex Jacobson from OX. Alex, welcome back to the show, sir.
Hey, Mark. Good to be here today, and a nice day in the market.
Yes, and I have to say that the efforts of you and your tech team are paying off. You sound great today, Alex.
Thank you. Took a little doing, but we got it figured out.
And the cacophony behind you means that a lot of stuff going on OX Day. It'd be fun to dive into that, I think, a little bit later.
I was going to say it's been really busy for the week before the Christmas holiday, kind of surprising today, and big run-up in activity near the end of the day when they halted Herbal Life and then brought it back a couple minutes later.
Everybody scrambling to get those Herbalife and maybe some Twitter shorts on as well before the end of the year. All right, and speaking of diehard shorts, man who's never been happier than when he's blasting out premium, of course, we are also joined by good old Mark Sebastian from Swan Wealth Advisors by way of Option Pit. Welcome back to the program, sir.
Hey, good to be here. Good to see everybody. Hope everybody's doing well.
How are things in the land of Swan / the Pit?
Oh, couldn't be better. Things are always great here at Swan Pit.
Swan Pit, is that the new branding?
Yeah, or Pit Wealth. One of the two. The Wealth Pit.
Wealth Pit. I like it. Just give us your money. We'll throw it into this hole. Has a great connotation. I like it. I like it.
Can't lose there.
Of course, this is the first time you and I have had a chance to chat since the big, epic educational extravaganza last weekend. That was really fun. I think I had a great time. I know you guys had a great time doing it. If you guys, the listeners, haven't had a chance to check it out, I know some of you have been filtering in after the fact. That's, of course, more than welcome as well. All that stuff is archived and recorded for you, so you can come on in. You can do it on the optionsinsider.com/events, or you can go over to Option Pit, register there. Just click on the registration tab. That link is still open. All the archives are up there. You can come in and register after the fact and download all those presentations, including all of the unusual activity stuff. I know a lot of you guys who signed up for it are waiting for that. That's going out today, all the links. That was many, many gigabytes of data, let me say, listeners, to upload just for you guys. So I hope you guys enjoy it. There's some pretty fun stuff going out today. So check that out, theoptionsinsider.com/events or optionpit.com/events, and register and check it all out. And, of course, it's after the fact, but if you guys have some questions or comments about anything we did, send it over. We'll be happy. Mark and I and Andrew will be happy to address that after the fact. No problems there. And as I'm spitballing here, we are joined by the last member of our all-star panel. The Skype gods out there in scenic and lovely St. Charles have finally smiled upon him, and he is able to join us. Good old Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, welcome back to the show, sir.
Always a pleasure to be here.
All right, and with the team fully assembled, we're going to dive right on into the trading block.
The trading block.
All right, those bells mean that it is time for the trading block, the portion of the show where we break down the day's worth of activity in the old options market. And it was an interesting one again on the street today, catching a little bit of a tailwind out there in the marketplace, market bolstered by some strong manufacturing data, both out of the U.S. and out of Europe, that seemed to really carry across both markets there and really bring some strong tailwinds into the marketplace. Of course, everyone's still kind of waiting and seeing on the big Fed meeting later this week, so we'll see how that plays out at the end of the day. We also saw some big deals taking place today. AIG and a few others entering in some big corporate actions. Those seem to resonate with the marketplace as well, because overall, most of the major indices closing up strongly on the day. S&P up about 0.6 of a percentage point, or about 11 handles to 1786. The Dow leading the charge, up nearly a full percentage point to 15,884, and the Nasdaq up about 0.75 of a percentage point to 4,029. VIX cash also getting a little bit of a bump up as we roll in here this week, moving up about a third of a point to 16.05 on the day today. Perhaps we shall start there. Mr. Sebastian, it's been a while since you've been on. Of course, I missed your big hosting extravaganza. You always seem to host when I'm not around and take the reins, and we appreciate that here. So what caught your eye the most in today's activity?
Yeah, there's a reason for that. That's because when you're not around, when you're around, you host. Otherwise, there's no need for me to host. But yeah, kind of an interesting day. I think a lot of people are looking at this market and saying, okay, why are we worried about all this ridiculous whatever, all this ridiculous, taper, this, that. To me, it's starting to look a little ridiculous, but there are people that are still convinced that we're going to have some sort of tapering, and so they keep buying volatility, and that's fine. If they want to buy volatility, go ahead. But you're not going to be happy you did, because there's no way that the Fed is going to be, is going to start tapering this cycle. It's not in the cards. And, I'd be looking at any opportunity like this. My mouth is watering to get in and really dig into that thing. If we get a little more selling here, or if we get a little more vol, I'm going to be all over it.
Yeah, it seems like if you're buying vol here going into this Fed meeting, you're really kind of buying the analogous to like the 1 Delta put, because it seems like no one really thinks that the Fed's going to do anything. So if they do, it's going to be a huge event, but that's a very, very low probability event. So you're really taking a swing, taking a bit of a flyer here.
Correct.
Going into the Fed meeting. But c'est la vie. Some people not content to just sit idly by. They like to put on some vol ahead of whenever the Fed talks. I suppose I could see some of that, but yeah, I tend to agree with you that this is a very, very, very low probability event. Of course, interesting. I saw an interesting stat today, actually, as I was working on some stuff for the show here. Everyone's going on and on about taper and how that's going to affect the market and whether it's going to be good or bad, et cetera, et cetera. But there's some interesting data going, at least through the end of Q3 or so, that the market seems to be taking care of and taking over some of the taper in and of itself. About a substantial amount of the ADV coming in equities going through September came from stock buybacks. Just firms taking advantage of a relatively low debt environment, taking that money and putting it to work, buying back their equity. IBM, Disney, Apple, of course, probably most famously leading the charge out there, buying back stock. Nearly 7% of the flow in the Russell going through September was all due to stock buybacks. And that, to me, really, that was surprising. And perhaps that kind of puts the lie to all this fear about tapering and easing and all that stuff. Because you know what? Corporate America is stepping in and kind of leading the charge, it says, regardless of the Fed. So I thought that was kind of an interesting stat and not one that you see quantified too much on a regular basis. Mr. Alex, aside from all of the, I'm guessing Herbal Life really caught your eye the most today.
Yeah, especially because the desk went kind of into a frenzy when the trading halt occurred. Of course, and then what happens is the Herbal Life bulls and bears popped out of the woodwork. So, it was about 20 minutes after 2 when they halted Herbal Life. And, of course, at that point, we all start watching the news and, is it going to open 20 lower? And I actually didn't think they would reopen it today. They reopened it a couple of minutes later, and their announcement was we're not adjusting any of our existing P&Ls. Everything stands, and the stock rallied 5 points off there. So, yeah, it was clearly something that piqued the interest, and there was a little bit of an option flurry after it reopened, which, of course, is a little late. But the volume prior to the trading halt was pretty ordinary for Herbal Life. So it seemed that the news was not something people were expecting, and it appears it was prudent to halt it for the few minutes and let kind of cooler heads prevail.
No such thing as cooler heads trading Herbal Life, Alex. It's definitely one of those high flying, high anxiety, high Tums quotient types of names. That's why people are attracted to it. They like that. If you trade in Herbal Life, I think you know what you're getting these days. Speaking of high activity, high Tums quotient, none other than Uncle Mike Tusaw. You love diving into the high action, the high stress, the high anxiety names. That's pretty much how you made your name in the options market, sir. So go ahead and give us the rundown of the really, really high anxiety names you were diving into today with that extremely low BBI.
Well, with it, I was doing some day trading on Brocade. Oh no, just kidding.
I thought, I knew you were always putting on a facade for us.
That's a name, huh?
Yeah, there you go. I was day trading Cree.
Cree. That's something. Today it was obviously an up day. I didn't really have too much activity to do today. Right now in Apple, for example, I'm still in a 550 calendar spread, the Jan Dees 550 put calendar spread, and not a whole lot of activity. I'm still between my 1,200 and 1,300 delta ratio for every 1,600 units of Apple that I'm in. So not a lot of activity today, quite honestly, because I really didn't have anything that any calls that warranted being rolled up at any point today. So kind of a dead day.
So even on today on silver, for example, silver gapping up quite a bit, no retracing there, or you're just kind of playing wait and see still in the metals?
Still playing wait and see in the metals. I'm still long gold. The silver is totally in cash right now, and I am waiting till after probably another week or two to still kind of see how the market plays out. See, I hate getting into stuff this time of year because I don't really feel this is an accurate depiction of what the longer term sense is going to be, bullish or bearish. So with silver, I'm kind of on the sidelines for now, and I'm fine missing any silver moves for the time being. Today, I have it up SLV up 27 cents on the day, so I had a little bit of a pop, but nothing for silver. That's like nothing, or at least an SLV. And then GLD's up 31 cents. So I really didn't have anything that warranted any major adjustments today in the flock.
It's funny, speaking of the commodities, it seems like all of the talk of late out in the energy side, particularly in the crude side, has just been between Iran and now all these recent reports coming out that U.S. domestic production is going to blow the doors off in a couple of years, particularly as they get more efficient at cracking into that shale oil stuff. And all of this news that you think on the surface would be really weighing on crude in the near term, and yet crude popping again today. I guess, regardless of all these other news coming out in the energy realm. So a lot of interesting stuff going on in commodities. Perhaps some good stuff, listeners, for our Futures Options Roundtable. Stay tuned to our next episode of that program. A little bit of a tease. That's coming out next week, so stay tuned to that. Of course, a lot of other stuff going on in the realm of options. We've talked on this show in the past, and, of course, a lot at our Unusual Activity Forum earlier in the year about insider trading in options and how difficult it is for the SEC to really find and identify and then crack down on that stuff. We just saw today that the new head of the SEC is promising much more enforcement in that area, particularly taking actual cases to trial. A lot of people are always complaining these guys get off and they get settlements and things like that, or the account gets frozen. No one ever comes forth. They're looking at bringing a lot more people to trial. That'll be interesting for the options market in particular, because historically there have been few, if any, real options actions taken in the court cases that actually have proven successful. SEC kind of not really knocking the ball out of the park with their equity enforcement this year, with things like Mark Cuban and everything else, kind of big high-profile cases blowing up in their face. We'll see if they're a little bit more successful on the options front. I think the other big news coming out of the derivatives realm today, of course, being this is kind of an ongoing discussion about exactly what the hell is high-frequency trading. Everyone talks about it, a lot of Sturm and Drang about it. No one seems to really be able to quantify it in any way, shape, or form. CFTC nowhere near able to as well. A lot of uproar over their potential definition of that and how that goes into some of the new regulations down the way. I don't want to go down a whole HFT rabbit hole because we could spend a whole day talking about that as well. But it seems like the regulators have no better clue than anybody else as to what exactly a high-frequency trader is, whether it's someone who just uses a computer, whether they trade X number of times a day or whatever, however you break that definition down. Still a lot of debate going on out there in the hinterlands about HFT. All right, before we roll on to the odd block, anything Mark, Uncle Mike, or Alex else really catch your eye in today's activity that you feel compelled to speak on?
Yeah, like I said, doesn't look like the bond market moved very much. The whole stock market was up. Just keep an eye on that bond market. If that starts to move and we start to see the yield get up to that 3%, then maybe then I'm wrong. But thus far, I don't believe I am.
All right, and that is going to do it for the old trading block. And now we're going to keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that funky tune means it is time yet again for the Odd Block, the portion of the show where we dive into, shall we say, the less than reputable portion of the options market. Everyone, of course, at home playing the home game should don their fedoras accordingly. We're going to kick things off today with a name we haven't really talked about here on the Odd Block a whole heck of a lot. This is Royal Bank of Canada, ticker symbol RY. Closing today about $65.16, up about 1.5% or so on the day. So the name that, for an odd block perspective, does about 1,000 contracts a day. That's actually fairly hefty for most of the odd block names we talk about. Doing about 4,100 contracts today, and pretty much the lion's share, almost all of that except for 500 contracts, coming in massive, massive trades going up, at least comparatively to the rest of the activity out here. On the Jan 65 puts, we saw 3,601 to be precise of the Jan 65 puts, lighting up the tape for prices around, looks like around $1.15 or so. Open interest is about 1,900 contracts, so it appears like this is mostly opening paper. It went up kind of in scattered blocks across a variety of exchanges and a variety of different sizes, so it wasn't a one-block trade. Kind of has a bit of the hallmark of someone putting this up against perhaps a large underlying position, looking to hedge against some near-term retracement. Looking at the chart here of RY, this name has been a little bit higher of late, kind of hovering in the middle end of its range. Maybe someone hoping they don't dance down any further, and if they do, looking to put on some protection. All right, next up on the old odd block, we have a name we haven't, I'm not sure if we've ever talked about this one. It's an interesting name that we watch it every now and then at Insider. This is ZION Bancorp, ticker symbol ZION. If you're familiar with them, you know they did some interesting stuff with ESOPs in recent past. Had some recent interesting ways that people could try to trade ESOPs as opposed to the standard way. This name closing today, $28.56. Pretty much unched on the day. This is the name that does about 1,000 contracts a day, doing about 2x or so of that, about 2,200 contracts today. This one's a weird one. The paper flow is kind of weird. We saw a lot of trading, pretty much the bulk of that ADV coming on this, on a little bit farther out, actually, the April 28 puts. We saw about 1,000 of those, 1,003 to be precise, going up on that strike for prices around between $1.40 and $1.50 or so. Not much open interest to speak of, so this is all really opening paper. What's weird about this is that we saw someone coming in, looks like a seller kind of early on for part of that ADV, and then that just flipped around to buying. The rest of that ADV or the rest of that volume is pretty much all buying. I don't know exactly how to dig in to see exactly how it breaks down what percentage was selling versus buying. But it is kind of weird to see that little bit of a flip. Maybe they hit the wrong button at first. Maybe they were doing something else and changed course midstream. Maybe someone else came in on their heels and said, I actually like the other side of that trade. What's your take there, Senior Sebastian? Not a strategy we see, not a technique we see employed very often, the old switcheroo.
No, that's certainly a unique one. I don't know. I mean, I guess it points toward the fact that the customer is I'm looking at this trade and it really doesn't make a ton of sense, to be honest. I don't know. What are your thoughts?
This, to me, has the kind of the hallmark of a trade where, maybe someone starts opening with a little bit of a sale, and then someone probably comes down the heels and says, wait a minute, I don't actually like that. Or maybe he got talking to by his risk manager. Or maybe it was the old clerk, and the clerk was putting it in first.
Weird underlying position that has to do with it, or it could be related to like a structured trade as well.
Yeah, that's why I wanted to highlight this one, because it not just the size. The size is decent size for this name, but it's not really anything to write home about. But the execution of it is kind of interesting. And listeners, if you haven't had a chance to do so, I encourage you to listen to this episode. If you're playing the home game, follow along. Look up ZION and check out that paper flow for yourself and see what you think. And just kind of get a good feel for how these kind of trades are executed. Check out the time and sales, because it is a bit of a head scratcher, and it might give you a little bit more insight into how to name this trade.
That first trade must have been tied up and had some weird stock price. That's the only answer to this, right?
Probably.
Or were they trying to get the vol down so they could start buying it?
That's a really risky trade. But it could be the latter, really, where maybe it got put up out of sequence, where the people facilitating it put their leg up first, and then the other part got put up. I mean, that's another way to really piss off regulators in a heartbeat and customers. But c'est la vie, that could also make sense. There's a lot of weird ways these trades do go up, and this one certainly seems to fall into the weird category, if nothing else. All right, next up we have Noble Corp, ticker symbol NE, closing today at $37.08, up about $0.50, or about 1.5% on the day. It's a name that does about nearly 10,000 contracts a day, which is pretty substantial for an odd block name, certainly. Doing about 10,000 again today. So no big spike in volume, at least, but interesting nonetheless. We saw pretty much about 50% of that volume going up in one pretty sizable trade here on the Jan. What do we have? These are really long-term. Jan 2015, 40 calls. We saw 5,000 of these going up for about $275 or so. So it's interesting for a couple of reasons. First off, the size. It's a pretty substantial trade. The term of this is a pretty long-term trade. We haven't seen too many in the odd block, too many 2015 trades lighting up the old tape yet. Of course, the open interest is about 7,000 contracts. So this could be closing. It looks, in our analysis, we kind of wrote it up as it looked like someone was coming in and buying these calls, perhaps tied to stock. Remember, listeners, go back to our synthetics discussions or our episode of Options Bootcamp where we talked about synthetics. Remember what happens if you buy calls and then you do that tied to stock, what you're actually doing. All right, and last up here on the old odd block, we have KBR Inc. I know, one of my favorites. Ticker symbol, not surprisingly, KBR, closing today down about $0.50 to $30.50. This is a name that does about 1,300 contracts a day, doing nearly 10x that, nearly 13,000 contracts, lighting up the tape today in KBR, including a bunch of that coming on the DEES-32 strike, in particular the DEES-32 calls. We saw, by the time we wrote this up, about 1,042 and about 2x that throughout the rest of the day, about 2,200 of these calls going up for a variety of prices. Earlier on the session, about 20 to 25 cents. Later on, these calls came off a little bit, not surprisingly. So they closed at about a dime to 15. The latter part of them probably going up in that price range. Open interest, only about 600 contracts. So this is all opening paper. Looks like, actually, a lot of it went up early on the 25-cent side of the spectrum. So this guy really paid the top of the spread for a lot of these calls, which is unfortunate. But this doesn't look like it's tied to stock, doesn't look like it's tied to anything else. No open interest to close, doesn't look like a roll. It really seems like this is the old traditional, what we see in the odd block, opening upside call buy, specking on a near-term pop in KBR. It wouldn't be an episode of the odd block without someone buying a lot of upside calls. Senior Sebastian, take us home. Is that your take as well, sir?
It most certainly was. People love that KBR. They're all about it. With these types of upside calls, it's either a hedge against a short or they're expecting a very quick move. That's just the way it is.
And KBR, it looks like this guy may be prepping for a pop. This one's come off a bit. Just in the recent sessions, it was trading as high as 33 a couple of sessions back. Now closing, like I said, today at $30.50. This guy could just be specking that this sell-off is overdone in the very, very near term and looking to pile in accordingly. We'll file this one on the to be watched and maybe get back to it next week to see how these calls and this trader fared over here at KBR. But now it's time to keep on rolling right on into our next segment, the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, listeners, welcome to the Xpress Block. This is, of course, the portion of the program where the Viceroy takes the reins. I get to take a bit of a rest, and Alex takes us deep behind the scenes to the Keebler Elf Factory, otherwise known as Options Express. Alex, you said HLF really lighting up a lot of the tape. We could hear just as you were starting off the show here, still a lot of noise going on over there at OX. Sounds like it was a pretty active day going into what are otherwise the holiday doldrums part of the year.
Yeah, exactly. It was surprisingly active today. And when I surveyed both desks in terms of what was keeping them busy, the futures desk has been remarkably busy lately in premium selling in the energy complex. That's where the liquidity is. And one of the things they showcased and pointed out, and probably a terrific topic for your futures options show, is the kind of liquidity you could see in the light crude contract and in the natural gas contract. Just lots and lots of liquidity and very easy to get stuff done. A couple of the other names that were active here today, and some of these are earnings plays, but there was trade lift today in Oracle, which reports this week. FedEx, which always around the holidays is kind of an interesting play and reports later this week. And a number of people playing Lululemon for a bounce. They took the stock out last week and murdered it. I don't think in my entire tenure here of looking at Lulu, I've seen it with a 5 handle, and it's down in the 50s, down from the $70 area. There's a lot of that stock and a lot of those options sitting in accounts here, obviously, as well as many other brokerage houses. But some people playing for that to take out the $60 level and get back up into the 70 level. So we saw a good deal of that today. Other than that, as you pointed out, Mark, reasonably busy day for this first final week before Christmas, and activity was good on both desks.
So you say energy and the commodities are really lighting up the premium harvesters. What's their weapon of choice? Are they WTI, or what are they blasting away in out in OX?
Light crude and natural gas. That's where the liquidity is. Regrettably, we're still waiting for the premium harvesting for futures options. That's with the product development people, but we spec'd it out into light crude, but that's not what's driving the business here yet, because it's not up yet. But it's just the incredible liquidity. Liquidity in the light crude contract is just extraordinary, and it's a testament to the work the CME has done to bring liquidity into those products. I know I harp on this, but I wish they do the same thing into the big S&P, because that would change the whole equation of trading. But here the vehicles of choice have been natural gas and crude.
Yeah, if you've ever listened to our long and short of futures options show that we do with the CME, you'll see they like to beat their chest quite a bit about the liquidity in a lot of those contracts, and not undeservingly so. Those contracts that you just outlined, Alex, are really, people always fixate on Apple, and they fixate on the ETFs on things like gold and silver, but sometimes they don't get past those into the actual underlying futures products, and they see how deep and liquid those contracts actually are. They're always put off by things like the pit execution, which is going the way of the dodo right now. Even things like WTI just hit 50% electronic execution just about a couple of months ago. So these notoriously pit-based products are now going electronic at a much more rapid rate. And you're right, the liquidity is there, the size is there. So all these people complaining about fragmentation in the equity realm, and they can't get their 10-lot spreads off because they're siloed on 2 different exchange spread books with both legs, or all this other stuff, and complaining they can't get size, they can't get vol. They should probably really start looking over at the futures and futures options side of the fence, because you don't have the fragmentation problem, and you got a lot of size sitting there. So that solves 2 of the common complaints for a lot of our listeners these days. So that might be an interesting one. Listeners, if you haven't checked that out, of course, check out LSFO, and of course, check out 4, aka the Futures Options Roundtable, coming to a podcast player with our next episode near you relatively soon. But now we're going to keep on rolling right on out of the Xpress Block and right on into the Uncle Mike Tusaw Block, aka the Strategizing Block.
The strategy block.
Whenever I hear that transitional music, I want to just grab a pipe and sit back in my den and open up a nice leather-bound tome and expound on some wit and wisdom. Luckily, we have Uncle Mike Tusaw here to do that for us today. Smoking jacket and stone tablets in hand. He is a bit of an old-school fellow. So, Uncle Mike, what wit and wisdom do you have to dispense for us today in this here strategizing block?
Oh, before we do that, you said you want to open up your leather-bound what? Well, your leather-bound tome? What's a tome?
A tome, a large book.
I learned it. You must. I'm convinced you read a thesaurus all day. You have quite a. You never had a shortage for new words. I think I learn a new word every time I'm on this show. I've never heard the term tome before.
Have you not visited my other day job, thesaurusinsider.com? We do a lot of traffic over there.
I believe that.
Where to assert the apostrophe? Where is the proper opposite term for whatever term you're looking for? We got it over there at thesaurusinsider.com.
Got it. Well, anyway, today what I want to do, I want to do a shout out to the Bears, and not the Chicago Bears. It's ironic.
Bear down, Chicago Bears. Let every play lead the way to victory. What?
Anyway, with that being said, I used to start off a lot of my webinars with "Welcome to Chicago, Illinois." We're broadcasting live from Chicago, Illinois, home of the Bulls and the Bears, and I am not talking about the football team. This is the trading capital of the world, everybody. But now I don't usually do webinars from Chicago, so I can't do that anymore. But nonetheless, you get the idea. Mm-hmm. With that, I want to share an experience that I had a couple years back. It was actually in spring of 2009. And I was just talking with an older gentleman, and he was just telling me how the Dow was going to go down to 3,000. And so I told him, I said, well, you should be really excited about the potential opportunity that exists there then. If you're that convinced it's going to go down to 3,000, I mean, how sure are you? He said, I've never been more sure of anything in my life. And so I said, okay, well, what you need to do is just simply short the market then. If you short the market, then the only problem that you're going to have is what to do with all that money you make from taking on this short right now. And so in hindsight, I talked to him a while later. He did not short the market, thankfully for him. But with that leads us to the question, what if you are bearish? Is being bearish a sin? Is it a crime? Is it bad? Is it un-American? I say no. If you have a bearish sentiment on something, one thing that I've talked about, I've beaten it to death on this show many times, is the simulated index concept, or the concept of putting a vast majority of your money into something boring or a fixed income type of instrument and taking maybe 10 to 20% of your income and buying calls with it. We've talked about that a lot on the show. So if you're bearish and you don't feel comfortable shorting the market because of the unlimited upside risk that exists with that, why not buy some puts? And you can buy puts at fairly reasonable levels. You can, if you feel that the puts are too expensive, you can buy put spreads. You can do a lot of things on it. So what I want to mention is that, let's say that you're convinced that the stock market is going down, that we are at a top right now, and that the S&P is just not going to make it through 1,800. We are at the peak, let's say. Well, with that, by all means, buy puts. And if you don't want to short your entire portfolio, that's obviously understandable. And just FYI, for the record, I am still bullish at this point on the stock market as a whole. But with that, if you are in the bear camp, then don't do it with a lot of money. This is an area with which you can simply buy premium. And if you're not comfortable taking on the premium risk because of the fact that you're not you don't like the idea of time decay working against you, then there's spreads with which you can do. Now, let's say that you have a bearish sentiment on bonds. It seems to me that everyone and their uncle hates bonds these days. I'm not a big fan of them myself, quite frankly. But if you're really that bearish on bonds, then by all means, you can do the same thing by buying puts on TLT, let's say. There's a wide variety of strategies with which you can do to exercise that sentiment. The same thing holds true with gold, with silver, a lot of different instruments that exist out there. You don't have to be bullish on it to have a sentiment on it. The bottom line with anything, folks, is if your account balance is more 6 months from now than it was today. And that's ultimately the goal of what we're trying to get to. And if you have a bearish sentiment on something, then these option strategies are able to do that. Now, the other thing with which I want to mention on this, like I said, my personal sentiment, I think we still have a little bit more of an upside run to go in U.S. stocks anyway. But I'm mentioning this because of the fact that I think that when the markets are at all-time highs or close to them, I've said it before, I'll say it again, never before in the history of the stock market, whenever you reach an all-time high, there has never before in the history of the entire market been a better time to sell your stocks because of the fact that's just a simple mathematical fact. So with that, I would encourage everybody to have some type of protection in your portfolio. And I'm not talking sell some covered calls. If you're selling covered calls and you believe that's a means of protection, then I think you're grossly mistaken. If you're looking at a covered call, that's an income-based strategy. That's something that'll act as a Band-Aid in terms of downside protection. Now, what I mean by a Band-Aid is that let's say that a stock goes from 50 to 49. And you sold your 55 call for $1. Well, the stock going from 50 to 49, that's a paper cut, quite frankly, and a Band-Aid is a very appropriate instrument or a very appropriate medical treatment to take on a paper cut. But let's say the stock goes from 50 to 22. That $1 cover call that you sold really doesn't feel too good right now. Yeah, it's nice to be $1 better off than had you just owned the stock, but quite frankly, that's a severed jugular. And if you're trying to use a Band-Aid on a severed jugular, it's not going to work very well and you're going to be dead. So with that in mind, I would recommend at this stage possibly looking into buying some type of protection and on the premium buying side in one way, shape, or form for your overall portfolio. Once again, I'm a bull on the market right now. I think we still have more room to the upside, but I think that it's wise and prudent to protect your portfolio in one way or another. And that is one to grow on.
I don't know if you know this, Uncle Mike, but it is deeply, deeply anti-American to be bearish in any way, shape, or form. If you are not bullish, 100% invested in the market, you are not a true red-blooded American. So shame on you, sir.
I disagree. I like Jesse Livermore, the boy plunger.
All right, I don't even know where to go with the boy plunger. So maybe we'll just keep on rolling. You can take off the smoking jacket, Uncle Mike. Head on back to the mountain. Put the tablets back. Because it's time to roll on into our final segment, Around the Block.
Around the Block.
All right, those car horns mean that it is time for our final portion of the show. Of course, Around the Block, this is the portion of the program where we prognosticate wildly and indeed recklessly, tell you what we're watching, keeping an eye on for, and perhaps expecting for the rest of this week leading into the big 300th episode spectacular. And as we touched on several shows, and a lot of our recent shows now, actually, that ain't a whole heck of a lot once you get past the Fed this week. And as we talked about at the top of the show, that buy-in vol, buy-in premium ahead of the Fed trade, very, very, very low delta, using that probability of expiring in the money, false definition, low delta probability of those puts really coming into play. Needless to say, some people are still doing that, as we saw today, bidding up a little bit of the vol going into the Fed. Maybe we'll start with you, Senior Sebastian. What's your take on the rest of this week? Of course, I think we've already expressed our view on the Fed, but you can feel free to weigh in on Fed again if you like.
Fed. I'm fed up.
How long have you been sitting on that one, sir?
And I'm telling you that it's the idea that we're going to have any kind of real tapering this month, I think is silly. And if you want to bet on that, you're going to be throwing a bunch of money away. I don't see how that happens. That's just the way it is.
Bernanke doesn't strike me as the kind of guy to really want to roil and shake things up on his way out the door.
Right. And the bond market is saying it's not going to happen, and they're much smarter than the equity market. When they're wrong, very rarely are they wrong. When they are, they're wrong in big ways. But very rarely are they wrong on these little things like this. And even more so, when they are, since 2008, they're always going to be wrong the opposite way. And I just don't see it.
So what's the trade du jour over there at Pitt/Swan right now? Are you really just looking to play wait and see till next year?
Yeah, well, I'm waiting until probably Wednesday, and then I'm probably going to go into some sort of short vol play. Probably using VIX or VXX.
Just collect that end of the year kind of balloon coming in trade?
Yep, exactly. I mean, the chance to sell an 18 VIX into the Christmas holiday is making my mouth water.
That is fairly attractive. I do concur, sir. All right. And Mr. Tusaw, what is making your mouth water in these lovely and exciting markets we're in right now?
Well, it's definitely not the Christmas hams, that's for sure. No, these markets are something to where this is not my kind of market. I'm just getting geared up for January, keeping a lot of powder dry at this point. Never been a big trader around this time of year. I think it's a time to try to spend more time with my family, but nonetheless, if the trade is there, I will do it. But in terms of with my style and what I like to do and things along those lines, most of the powder is going to remain dry for another week or two.
So let me just see if I have this straight. You don't really trade earnings season. You don't trade around major holidays. So you have about an 8-day workings calendar for the year. Is that correct?
That's on a busy year.
I want the Uncle Mike Tusaw's calendar. That sounds pretty good. It's like the old medieval church calendar. You work 6 days a year.
Hey, but when we work, we do not go to the bathroom. That's how we do it. That's the BBI.
Serious business over there at the RCM offices. When they're in, they're in. All right, that's a good. I like that. You should shop that up the flagpole there. A new slogan. When we're in, we're in. RCM. Take that however you like. All right. Last but certainly not least, Mr. Alex, what is catching your eye for the rest of this Fed-dominated week?
Seasonality says this should be a good week or two, and obviously today was a pretty terrific day, but, we've been up 2 days out of the last 10, so this market is clearly thin and somewhat schizophrenic here, and I agree with both Mike and Mark about this will be a quiet period. There are a couple earnings this week, and as I said, we saw a little paper today, but I think interesting earnings will be, and I think we'll keep an eye on both FedEx and Nike, which are due to post this week, because FedEx especially is a barometer of the economy as a whole. And if you look at the earnings estimates on FedEx, they are fairly mixed, so there are people all over the place. I kind of agree the Fed won't do anything. This meeting will not be Bernanke's, big parting shot. I think he goes out quietly. But you never know. And as Mark pointed out, vol has not come in as much as you would have thought this week. And if vol continues to creep up going into the Fed meeting and the term structure of bonds doesn't change, then I'm totally confused. But people are clearly buying vol then going into the Fed meeting. And other than that, I expect a good couple of weeks here in the market, barring the 10 taking out the 3, and we'll continue to watch things.
I know Lulu, like you said earlier, is a big favorite with the OX clientele. Do they carry that love into Nike as well, or is that more of your own personal interest there? No.
Nike's a decent-sized name here, and especially on the option side, more so than on the stock side. With the merger with Schwab, one of the things we looked at is one of the most widely held names, and it was not uncommon where Schwab had lots of stock, we had lots of options and not stock. It's kind of the different character of our two businesses. But yeah, Nike's a very popular name up here. We don't do a lot of business in a lot of the blue chips, and I remember a couple weeks back I made a comment that I thought I was working at a Boston investment banking firm, because that day we had done a bunch of Exxon, Procter, but occasionally momentum will come into those names. Exxon today up a couple points, and not really a lot of news and energy, little news out of Libya, but our clientele is more likely to be playing in the Exxon options than they are in the cash product.
Not surprisingly, given the OX customers and their clientele. Maybe next time you play trading patterns, we'll do Lulu and see if we can stump everyone. Of course, now that I've let the cat out of the bag, you're all going to cheat, I'm sure. So, all right, and that is going to do it for the Around the Block segment, and that's also going to do it for this 299th episode of the Option Block. Let me just say before we dive into what everyone else has cooking, to remind you guys, if you want to be part of that big 300th episode spectacular, then let your voice be heard now. Send it in at theoptionsinsider.com. Post a comment. Hit us up on Twitter, twitter.com/options, or on Facebook, facebook.com/theoptionsinsider. I see a lot of you guys taking advantage of that route, so nice to see the Facebook love pouring in. Or, of course, do it the old-fashioned way. Email questions at theoptionsinsider.com. Let us know if you have any pressing questions you want to have asked on the show. We can do that. If you want to have any reminiscing you want to do of your own favorite subjects, least favorite things we talked about on the show, you can get into that too. Favorite guests, whatever it is that really catches your fancy over the past 299 episodes, let us know. We want to make sure you guys are fully represented on this big 300th episode spectacular, because it's not just about us gazzing on. We could do that all day, but it's really about you guys. You guys tune in. You make the show what it is. We want to make sure your voice is heard. Coming up for this big 300th episode spectacular, coming out to a podcast player near you this Friday, the 20th. All right, and before we go, let me check in with each of my cohorts, my partners in crime, starting with you, Uncle Mike Tusaw. What's cooking in the land of RCM as you wind down the final weeks of the year here?
We got another partner confirmed for a webinar this coming January. It'll be revealed in due time, so stay tuned.
All right, another webinar tease from good old Uncle Mike. And Alex, what is coming up in the land of OX?
Well, live events are done for the year. We did St. Petersburg this last weekend, had a surprisingly large crowd, but that's probably a testament to Jimmy Rouzan and his abilities. Webinars that are still going on this week. Wednesday, Dan Gramza from the CME talking about Elliott Wave and applying it to the trading of futures and futures options. Also on Wednesday, one of our IRA webinars focusing on, as Mike pointed out, buying protection in an IRA and how it can be done. Thursday, a couple webinars I'll showcase. The walk limit, which is a real interesting product. It's banging out a lot of business here at Options Express. It essentially replicates electronically what an intuitive trader would do, and we continue to be very excited about it. Also Thursday, speaking of IRA hedging, IRA collars as part of the continuing series of what you can do in IRAs. There is a full slate of webinars here at Options Express. You don't need to have an account to attend any of the webinars or any of the events. Just come to the site, optionsexpress.com, click on the Educate tab, and you'll see all of the events. The marketing people always want me to also mention the $150 Amazon gift card with new money to the firm. 10 trades in the first 90 days. There are more conditions that apply. Come to the site, the landing page, optionsexpress.com. Click on the image of the Amazon gift card, and you can see what you have to do to qualify.
Yes, listeners, get those before Andrew scarfs up all the rest of them and you guys are out of luck. All right, and last but certainly not least, Mr. Sebastian, tell us what's cooking over there in the land of the pit.
Well, we're just kind of wrapping things up. Go to trackthetrade.com to follow along with my site, my show on SIBO TV, and you can, there's a free 20-part email course that goes along with that. And then, I think Mark and I are going to sit down and figure out how we can do something else fun together. And if you like that idea, shoot us an email and let us know that you wanted us to do another one.
Yes, and speaking of doing stuff with Mark, the rumor is VolViews is coming back in the new year, listeners, so stay tuned for that. I know a lot of you guys have been writing in saying, where's my VolViews? I need my VolViews fixed. VolViews coming back, revamped, and stronger than ever in the new year. So stay tuned for that. And on behalf of Mark and Alex and, of course, Uncle Mike Tusaw, I want to thank all of you guys out there in the listening audience for downloading and streaming and subscribing to the show and for propelling us onward to the epic 300 show spectacular milestone. Really looking forward to that one. And we'll see you next time for episode 300.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.